Property Unfiltered. Real investors, real stories, the good and the bad in property investing.
Hello, everyone. Welcome back to a brand new episode of Property Unfiltered. As you heard just before, unfiltered, raw, uncut, basically a no BS show about buying and holding on to property. I'm Grace Ormsby, joined as always by the amazing, wonderful, incredible, whatever adjectives you want to use, Simon Loo. Welcome back, Simon.
Thank you very much. So good to be back. First recording of 2024.
How was your break?
It was good. Had some time off. Went overseas with the kids and the family, and they had a blast over in Singapore actually. Nice and easy place to travel with young kids. So
sure.
Yeah, it was super fun. Ate a lot, gained a lot of weight. Trying to lose it off now.
I mean, what else are you supposed to do on a holiday? Isn't that the point?
Yeah, exactly.
How important is it to you to take those breaks, to have a holiday?
Look, they're so rare for me because, day in, day out, running business, you just have to be in it all the time. You've always got emails, you've always got calls. And I think over the Christmas, New Year break is the quietest that you can get. So, whatever it takes, we have to take that time off, even if it's just for a week or 10 days or whatever, and try and ignore as much of the incoming calls and stuff as possible. But I still did a bit of work overseas, but nothing too daunting. So yeah.
Well, the important thing is you've come back revived, refreshed, ready to hit the ground running in 2024. And it would not be an episode of the Property Unfiltered show if we did not have a guest joining us in studio. So Simon, can you do the honours of introducing?
Absolutely. Very special,
guest?
very, very special guest today. A good friend of mine as well, Jyh Kao. He's the founder of mortgage broking firm Jyh Capital and an extremely successful property investor. So I thought it'd be super interesting to get him on and, share some of his, a bit about his story, his background, his property portfolio, and obviously, his journey up until now where he's had some very recent exciting developments as well. So, definitely glad to have him on. Thank you for coming, Jyh.
Thanks so much, Simon, and thanks, Grace. It's really exciting to be on, so I really appreciate it. And it's always good to be now on the other side sharing my learnings because I used to always listen to these podcasts. So, it's good to give back and share.
Awesome. Yeah. Before we do get into the nitty-gritty of everything you've obviously done over the years, how big is your portfolio at the moment? Where are you at this point in time, just so we can set the scene of how much we need to get through this episode?
Yeah, so my portfolio is joint with my partner, Danica, hence the name Jyh Capital. So we've been investing since 2011, so just over a decade now, and our combined portfolio is just over 10 mil, and that's across all residential properties in a various different states, so New South Wales, Queensland, Western Australia. That's about it.
What was the initial motivation for you behind going down the property investment route?
Yeah, that's a really good question. To be honest, when I first started, I had no idea what I was doing. And this was going back.
I've heard that one before.
All of us had no idea.
This is going back 10 years ago. I was 24 years old, and I had a long corporate career at Opus. I was working in telco. And my journey's been quite interesting because when I first started property investing, my parents they always told me as I was growing up to buy property, but they didn't tell me why. They didn't have an investing mindset. Their mindset was just you have to buy a property, right? Own a property for yourself. But they never said to go out and go grow a portfolio or anything like that. They just said, save your money, go invest into a property, right? And eventually move into it. That's kind of it. That's kind of what they did. And that's it. And so as I was working at Opus, I started to learn more about investing and, made some mistakes. The first property I bought was a one-bedroom apartment in a very large block of 100 apartments. So it didn't perform that well over the long term, but it did make some growth over time. But if I reflect back, that's probably been my biggest learning and also a good opportunity. But yeah, for me, it was just trying to get ahead because I knew saving my way to wealth was going to take a very, very long time. I remember my first full-time pay at Opus was about $55,000. And I thought I was rich at the time. But then quickly I started realizing it's going to take me a long time to actually save money after taxes, after expenses. And I just knew I had to do something different. And then I started looking into property investing.
And you're in Sydney, aren't you? You're Sydney-based.
Yes.
House prices were significantly cheaper back in 2011 than they are now. And people must still be thinking the same. To be saving up enough now to buy is such a daunting task. But there's clearly other ways to go about it.
Yeah, absolutely. Yeah.
What was like your driver to, after that first, I guess, apartment that obviously in hindsight you were thinking was a mistake? What kind of kept you going to your second and your third and kind of kept you rolling onto more properties? Because for a lot of investors out there, when they get burnt, especially when they're quite new to it, it's a lot of money, it's a lot at stake, and immediately they get turned off and kind of don't want to buy another property again.
Yeah, that's a really good question. When I first bought this property in North Sydney, I never had the intention of growing a large portfolio. I bought the property actually with the intention of moving into it, because I was in my mid-20s and I was thinking eventually I'm going to have to move out of home and eventually stop free resting off my parents. So I actually did move into that property and lived in it for 6 months, and I really love interior design and decorating, and so I thought it's an older apartment. How can I make this place look a little bit nicer without spending too much money? So I got really into cosmetic renovations, and I started doing some painting, changing the floorboards, pulled the carpet out, put in some laminate floorboards, new fixtures and lighting, liquor paint, and that transformed the property, about 10 grand. And then I thought, okay, well, go back to my broker at the time, see if there's anything else I can do. We got a valuation done on the property. They said, because you've done a renovation, go send out a valuer to go have a look.
Yeah.
And to my surprise, that small renovation had increased the value of the property by, I think, 60 to 70,000.
Wow.
In just a year.
Yeah,
and
nice.
that just blew my mind. I was like, wow, this is like, made 60, 70K in less than a year. That's like more than my full-time income.
Yeah. Coming back to what Grace said originally, I think like the house prices back in Sydney from 11 to now is like night and day. So I think it's definitely helped not only from the renovation, but just the organic growth. Even in that short year, I remember the Sydney boom started around 2009, 2010. So you pretty much got in, like, I don't know if you knew at the time, but, you timed
hindsight,
it pretty
if we all knew what we know now.
100%, yeah.
Yeah, and I had no idea about these cycles. Like, I just thought, okay, I'm just going to buy. But, yeah, you're right. Like, I think I just kind of rode the Sydney boom towards the back end of it.
Okay.
Yeah.
So that was pretty exciting, obviously, getting that equity and then onwards to the next one and so on.
Yeah, that's right.
So then talk us through what propelled you to go from, okay, this one worked, let's try it again.
Yeah, well, so after doing that renovation, I got hooked and I was like, I need to try and replicate this to almost every property that I buy. And I really love the renovating part. So I was very focused on trying to increase my income. And I was actually more excited about getting a pay rise when I was working at Optus because I knew if I get a pay rise, that's going to increase my borrowing capacity. So I worked at Optus for a good 10 years and it's a really long corporate career. And I worked in a lot of different roles and I changed jobs within Optus, such a big company. And I just try to focus on increasing income every single year and work on my skill sets and experience so I could try to, get a significant pay rise. And each time I did that, I would then go back to try and buy another property. So I was priced out at the time because after buying that first property, I was pretty much capped out from a lending capacity. Or at the time, that broker that I worked with didn't really know how to structure or work on a strategy. So I just assumed I couldn't buy again. And so I was on a pause for about two years. And then the second property I bought in Queensland, I think it was 2015, in a suburb called Wynnum. Yeah.
Okay, cool. What kind of led you to Queensland? Was it just lower price points and less competition? And
yeah, 100% right. And actually, I used that when I bought that property. It was actually with the buyer's agent. Okay. Yeah, it wasn't you at the time, because I didn't know you.
Well, I do want to get to how you guys met each other, but that will obviously a little bit further down the track. We won't get there. But yeah, obviously, you knew you could
Yeah.
get more bang for your buck, really, somewhere else.
I was at a seminar at work, and then they had a buyer's agent there, and I thought this is really interesting, and I never thought about buying interstate. And really funny story, I actually had an argument with my dad because at the time he was like, "You're not buying in Queensland." And he told me, he's like, because he was always kind of vested in what I was doing. And I said, "I'm going to go buy in Queensland." And he told me, "That's such a bad idea. You've never seen the property. You've never been to Queensland. Like, what are you doing?" And he actually had an argument with me. And so in the end, I just said, look, it makes sense, right? The prices in Sydney are really high. The rental yields weren't as strong. I started looking into more of Queensland, but then I said, I'm going to go use a buyer's agent because I just have no idea what I'm doing. I thought I'd use them as a learning experience and actually go through the process. And so that's how I got into the Queensland market. And then there was a couple of years where Queensland was quite flat, so it didn't really grow too much, but the rents were good, so at least it was covering the cost of the property. And then I think only the last couple of years, really, Queensland started to turn. So I really started to see the growth in that Queensland property.
I think just really quickly on that point as well, I remember exactly the same thing. When I bought my first 2 properties in Queensland, my parents were like, well, what the hell are you doing? At that time I was still living at home. So, I suppose there was still that level of...
Can you please get out?
You have to kind of respect, what they want as well and all that kind of stuff. And my dad's actually quite handy with the tools. So, one of the houses I bought needed work. So at the time, I don't know why I did this, but I decided to go up with a carload full of tools and hammers and all this kind of stuff to do the work myself. And it was a harrowing 2 weeks of, seeing my dad just slave away at this house that he didn't like in the first place in the journey. So I think the lesson there is like, as much as people around you have your best interests at heart, sometimes you just have to go your own way. Unless they're obviously property, experts or they've got like a large portfolio themselves or something like that. And obviously it's led to pretty green pastures, to date.
Were you expecting then capital growth or hoping for it, or was getting a good rental yield enough at that point in time of where you were at with your property investing journey?
Yeah, at the time, I was just looking more for rental yield because I knew I was going to hold the property for a long time. I wasn't expecting to see it grow straight away. Yeah.
So did you do any interior design work there?
Well, similar to Simon, my parents actually flew up to Queensland with me to go see the property when we settled because they wanted to go see it, and they bought tools and stuff as well. And we spent a good 2 days in there just doing the gardening, cleaning. So that was a really fun experience. It was good bonding with the parents.
Yeah. I mean, like,
very supportive parents we got.
Yeah, for sure. I mean, it's so cool, and obviously a family affair for you guys, and it obviously validates what you're doing as well.
And when they got there, they're like, oh, this area's actually not too bad. It's a real house.
Yeah. You're not just showing us pictures of something that doesn't exist. And this was before the days of the AI generated photos.
Yeah,
it's all
real.
Yeah.
Hits you in the face.
Yeah. So how much work went into that second property? Or like, I just feel like because you started with the interior design thing, is this going to be a recurring theme throughout all the properties that we're talking about today?
Not really. I think I started to realize how much work there is in renovating, especially when you're doing a lot of stuff yourself. So now my strategy has kind of changed to more looking at what's the minimal amount of work that I need to get this property rented out and livable. And then if I really need to extract equity, then I might consider a cosmetic renovation. So I'm more strategic now with how I approach it. But before it was more like just a hobby. I wanted to try and explore what I could do with it. And then after you see what works, you try to replicate it. So I did a little bit of work with that property, but it wasn't anywhere near the first one. It was more just cleaning everything because I think the property had been vacant for a little while. So the grass and the gardening was really bad. So my parents said, let's just go over there. We'll fix it up, get it nice so it can go on market and get a tenant in there. Because it was vacant for a good 8 weeks.
Yeah, wow.
Yeah. Because during that time, the Queensland vacancy rate was actually a little bit higher. So it took a little bit longer to rent out. So that was one of my concerns. So we just, try to get the property into a condition that it could be livable ASAP. So it could be rented out.
Okay.
Yeah.
Did it rent out easily enough?
Yeah, it was pretty easy. It just took a bit of time. So yeah, I mean, right now, if you look at Queensland, you can rent a property out probably within days. Like
probably
8 weeks
days.
is quite long. Yeah.
probably one of the things that I learned about, renovating those earlier properties is eventually you realize you can get away without doing it. Not in the sense that you can leave a house unkept and unlivable, but there are a lot of properties and deals out there where they don't need work at all. And now we kind of advocate to our buyers that if your goal is to build a large portfolio, get passive income, early retirement, financial freedom, all that kind of stuff, every dollar of capital that you have, whether it's in savings or equity, should be going into another property. When you spend 20, 30K doing a reno, not only is it that time wasted, 8 weeks of vacancies and, a lot of effort and time and money that you have to put into it. But when you stick tenants in, yes, you're going to get a little bit more rent, but it's generally not worth it over a 5 or 10 year period because you're going to have to redo everything again, because of wear and tear and depreciation and all that kind of stuff. So, the properties, I think, maybe for you subsequently as well, have been pretty much you just buy, rent out, move on, pull out equity, and then just kind of keep repeating that process. Would that be correct? Or?
Yeah, that's right. Yeah, I think as you grow a larger portfolio, to Simon's point, you look at the opportunity cost of money, right? Because if you spend a lot of money on the renovation, that eats into the next deposit as well. So I think I started to realize that as I was running out of cash.
Yeah.
So
even just the fact that, you thought the lesson learned in that first property that you bought was that renovating gives you the capital gains.
Yeah.
When that doesn't necessarily have to be the case.
Correct. Yeah.
It's just the time spent in the market.
That's right. Yeah. Especially if you're going through a market that's already rising. Yeah. Maybe if the market was flat for a long time, you could probably do that. But yeah.
And then just wait until you sell it to do the big reno.
Yeah.
Sell it to someone who will actually not only appreciate it, but as the owner, you're going to get maximum price out of it as well. So yeah, I think that's probably one takeaway as well.
So I want to talk about the third property next, but I also want to talk about how you guys met. When was it in this property investing journey that you guys actually met up?
Well, we
found each other.
We met like a couple of years ago, I think, when Jyh first started JD Capital, and I've always been a buyer's agent, and I'm always on the lookout for people to connect with that's built up a credible property journey themselves. Because I feel like that's super important, whether you're engaging with a broker or anyone else in the property industry. When they've got first-hand experience, especially when they've achieved what you're looking to achieve, they can not only help you, in Jyh's world, get you a loan for your next house, but they can also give you advice on how to structure the loans properly and all that kind of stuff. So I'm always looking for these. For people like this to connect with and kind of build our network to work with. And, to date, we've got a lot of sort of mutual clients now, following a very similar journey as well. And it was actually from a recommendation as well from one of the first guests that I had on this show, Michael. And I believe Michael mentored you as well to become a broker. So it's kind of all like this family of just people who are really into property and they've, achieved certain things and yeah, that's how it all began. Yeah,
cool. And look at you now on the podcast together.
Yeah, they were good days. I remember we started working together or in the same office, and there was just a really good network of people. Like we had a couple of brokers, and Simon was there as well.
Yeah,
and everyone was business owners, and we would bounce ideas off each other. We'd talk stuff about property all the time, and we just realized the strategies that we had and the stuff that we had were very similar.
Yeah.
And yeah, Simon's right. So Michael Shah, which I think he was one of the previous guests, he's my mentor. So really grateful to have met Michael and then meet Simon as well. And that's how it all started.
There you go. It's crazy as well how it's not even real. I guess it's your personal lives collide with your professional lives in the end, seemingly when you enter the world of property, because as you said, you spent a really long time at Opus. You had a whole other career before this. How far into the property investing journey did it cause your brain to tick over and go, hang on, I could do something else here?
Definitely. I think towards the end of my career, I got to 10 years and I was just looking at myself going, where can I go next from here? I'd done a lot of different roles at Optus, and it's a very big company as well. So, there's also a lot of opportunity. So I really tried my best to see it out. And towards the end, I think just nothing was really inspiring me to stay. And, similar to Simon's story, investing allowed me to have that passive income and also look to achieve something a little bit more and get ahead. And I thought investing or, getting into a business will really allow you to scale as well and also help a lot of other people at the same time. So towards the end, it was more for me looking at how do I transition into a business and also build that business up as well.
Yeah. So how far into the investment journey, how many properties had you built up by that point in time? Like, I'm just thinking, is there an inflection point where it becomes a very real possibility where you can go, I can do this, I can take the risk?
Yeah. Well,
or does it get more daunting the more you've got?
Towards the end, I was starting to get really serious about it. The first couple of years, I was just dabbling here and there. Didn't really have a clear goal or a strategy. So it was probably towards my later years at working at Optus where I really started to get serious. And I think there was 1 year where I accumulated about 4 properties and just went really hard.
As you do. That was very casual.
That's
that
when
was
the
a bit too
addiction
casual.
just takes hold of you and just
4
can't stop.
properties in 1 year. Let's unpack that then. The 4 properties in 1 year.
Yeah.
When was that? How did that all kind of come about?
Just before COVID.
Just before COVID.
It was actually the first wave of COVID. COVID hit and I saw an opportunity, and this was the time when I was having a chat to Michael and came across Logan, of course.
Mm-hmm.
Oh, we've heard a bit about Logan.
Infamous Logan.
Simon's very familiar with him. And I just started researching to Logan, and then I started looking at the numbers, and it just baffled me. I was like, how can you get such good rental yields in a suburb that is only about an hour from a CBD and still get freestanding houses?
Yeah.
And that's when I went back to my dad, got a spreadsheet up, and I showed him the numbers, and even he started to scratch his head. He's like, "Yeah, this is strange."
Yeah.
And then I was thinking to myself, the only way for me to lose money on these deals is if these properties get cheaper. How are they going to actually get cheaper? Like, there were only about 300,000 at the time I was buying them, and I just thought to myself, I'm going to take a gamble. I think it's worth the risk.
Yeah.
We'll go and buy 4.
Same.
Did you guys know you were talking at this point? Had you crossed?
No, we weren't actually.
No?
I don't think we were at that point.
I knew of Simon because Michael did say, because I was doing a lot of the research myself, like looking, and he said if you do need someone to speak to, he did mention Simon's name, but I hadn't met Simon at the time.
I was probably competing with you for some of those
I was just
properties.
going to say, is this whole podcast series just going to be like all the landlords of Logan? Like, is it a series?
No, I think, I don't know. I don't know. I'll try and find some more guests that have lots of properties in Logan. But that's like Jyh said, like, it was basically land value, and you got a free house, free building out of it. And then, you just look at, like, similar to what we look at now, when you see a suburb at 300 grand, and then you see once the next suburb over, it's 500 grand or 600 grand. You just know eventually that gap's going to close, and it's always the cheaper stuff that gentrifies and improves over time. So I think, taking that risk, I actually don't think it's much risk at all. I think the risky stuff is when you go buy like $1 million property that rents for $700 a week. There's so negative cash flow, and you're just hoping and praying that it's going to go up to 1.5 or something to make it worthwhile. But these houses, you buy them, they look after themselves. You can pull equity out of them really quickly, buy another one, and you just build that portfolio over time. And now they've all kind of grown. So yeah.
What a good litmus test or even a pub test to just be like, can it actually get any cheaper?
But the funny thing is, when you talk to other people about it, they think it's risky.
Yeah.
They'll say, oh, you shouldn't buy there. Or it's like, no, it's really bad.
I think that comes from, I get that a lot as well. And I think that comes from a place of unfamiliarity and maybe a little bit of insecurity about buying in areas that has always had a bad stigma, because everyone wants to. I mean, buying property for most people is a very emotional thing. It's about where they want to live or where they do live, or about all the sort of conveniences of being close to XYZ and all that kind of stuff. So when people think of areas like Logan back in the day, and let's say you lived in Brisbane, it was one of those areas where you wouldn't even drive into, for a lot of people. So that kind of carries on, and in the back of their minds, they're just emotionally thinking, oh, I'm buying into a really bad area and I'm going to get lots of bad things happen with the property and the tenants and all that kind of stuff. So when you see past that and you just look at the pure basic numbers and fundamentals, you realize what kind of opportunity it actually is. So yeah,
For sure. So 4 in 1 year. Were they concurrent? Were they consecutive?
They were pretty quick.
Yeah.
They were pretty quick succession, because this was during the first wave of COVID, and I remember there was lockdowns and there were people that were selling. They were a little bit scared, and so I was keeping an eye on the market quite a lot, almost every day, just refreshing the screen.
There wasn't much else to do.
That's right. And so I just saw an opportunity, and I think that's when I really jumped on the opportunity.
Yeah. And how many properties were you at before hitting the Logan ones?
I think I was around 3, and then I got to Logan, and that's when we got to around 6-7 properties.
Yeah. And supercharged it from there.
Yeah.
And then we're clearly thinking, I don't want a corporate career at a telco anymore.
Well, you just start to realize that you're making more money from these so much more money, like purely from a financial perspective, than your day job. Like each property that you buy, if you're buying well enough, the equity that you're getting within 12 months is immediately above your salary that you might be earning at the time. So then mentally, for me anyway, you kind of flip it around and go, okay, I'm not working for a salary anymore. I'm working to get pay slips so I can buy my next property. And then in buying properties, and that becomes your new job, and your career or your day job becomes just a process of doing that. So once you have that mindset, you tend to be open to getting another job, temporarily, just to get extra pay slips to buy more houses, or moving to different jobs without really thinking about, I've got to be, get all uncomfortable, and you kind of, again, emotionally become removed from that process. So yeah.
And I really like your perspective, Jyh, even from the fact that so many mortgage brokers out there are preaching that, get the next step in your career, like, wait for that pay rise, or what else can you be doing at your company? How can you be climbing the corporate ladder? And you've done all that, and you've still, and that's very, very valid, but then you've still been able to pivot, which is cool. Yeah.
But I think sometimes it's a lot of sacrifice. Like a lot of people look from, the outside, and they think it's, we'll gifted some sort of money, or we had been really privileged in some way, and it's absolutely not. I think if I look back, there was a lot of sacrifices that I had to make in order to get here, and so
100%.
Property investing is definitely not always rosy, right? I think that's why this podcast is so great in terms of sharing anything that's unfiltered, because I don't talk about this much, but when I started my business and when I wanted to increase my borrowing capacity, I had to move back home. So I moved back home to go live with my parents for 2 years. That's something I never really spoke about, because it's not something that I wanted to really, I wasn't very proud of it either. But I did what I had to do in order for me to then, basically take one step back to go 2 steps forward. Also working another job. Like I've worked as a personal trainer and a coach in a gym, which I own. And so I've always been doing that on the side as well. So doing that on the evenings outside of work hours, and I was working very long days. So that also allowed me to have more cash flow, also have more income to then go borrow. So there were certainly a lot of sacrifices, and I think people, if the will is strong enough, you will do things, and you will take action or find ways to do it. And that's where a lot of people who want to get ahead can actually look at doing those things.
Yeah, good on you. So what happened after those Logan properties then?
That's when I decided to transition into starting the business. And so I met Michael, and he was my broker. And I just thought, for me, I was so passionate about property. I just thought, I have to transition into property. This is something that I love, and that's all I was talking about every day. I was not really engaged at work, so I thought, it's not fair if I stay at Optus. So transitioned into mortgage broking, and I really wanted to provide a strategic approach to mortgage broking. I think, just like any industry, right, you're always going to have very good people and some average people in any profession. And so I really wanted to be a great broker, someone who can provide strategic advice. And I wished when I started, I had a blueprint, because I didn't have a blueprint. I kind of just bought a property, sat on it for 2 to 3 years, didn't use any of the equity for a little while. And then if I look at my journey, there was about a 2 to 3 year gap in between the first couple of properties. So I could have went more aggressive in the beginning, but I didn't, because I didn't know that it was possible and I didn't have a strategy. So if I look back now, what I really wanted to do was just help clients create a blueprint. And that strategy is essentially, here's what you should be doing from day one. Here's what you should be purchasing in terms of like your first foundational asset. How can you quickly manufacture growth? Because the ultimate goal is to get the equity out into the next one. And most people sit on that equity or don't capitalize on that equity, and it's unrealized.
You have to keep moving forwards. And yeah, a lot of people think the journey is rosy. It actually, mostly you're dealing with negativity. It's not something that a lot of property investors talk about. The negativity can be coming from tenants, can be coming from maintenance, but I think most of it actually comes from around you. The people around you, the media. One day they're talking about an area going up, the next day they're talking about doom and gloom. So property. Most people own properties for 5-10 years as a minimum time frame, and the reality is, unless you're pulling out equity or unless you're selling it, you don't realize that you're actually making money out of them. So during that entire time, all you're dealing with is pain and a lot of uncertainty and this and that. And actually, that's the stuff that stops most people. Because buying property and getting equity out, if you're buying the right deals and stuff like that, it's not super difficult. But it's I think it's the journey and emotional and sacrifices you have to make, like Jyh did. That kind of sets it apart.
Yeah, and there'd be 100%. Mind games in there as well, I'm sure.
100%. Yeah. Sometimes you question yourself if you made the right decision. And yeah, like Simon said, like when you start having those costs accumulate, it does affect you, right? Because you're thinking, it's costing me all this money to hold this property. Is it worth just selling it right now and just, having a quick sale, and then you ease the pressure a little bit. But yeah, when you think about the long term and what you're really trying to achieve, that cost that you're paying now is actually quite small in the big scheme of things. And that's where you really have to have a different perspective, and also having the right network of people. It's good that we have a lot of mutual clients where, they're all similar mindset. Right? Everyone's investment, mindset, and they're thinking long term. They're obviously, doing this for a reason, right? So the way that they're thinking is a little bit different. So it's good to have that network of people and just sharing and bouncing frustrations as well at the same time.
Yeah, it is. It's like a property psychiatrist or something,
Yeah.
Maybe I should change the show name to property psychiatrist.
That. I mean, but it comes into, and I want to talk about, you guys have got some mutual clients that have done some pretty incredible things as well. But before we get there, speaking of that mindset and going beyond, obviously having the quick wins with the Queensland properties, have you had to have a mindset shift or a change in perspective going to business ownership and then continuing the growth of that portfolio? Or has it been much of the same? Like, what does that actually look like?
Yeah, definitely. The mindset shift for me has been probably quite extraordinarily different, and also helped me become a better investor as well. Because I think most people start out, you think too much about the small things, like how much is it going to cost me to replace this, and how much cost is everything that's going into the property. But then that's just all part of doing business, right? The cost of doing business. And things also like, a lot of people will complain like, the interest rates are too high right now. But in reality, it's just the cost of doing business, right? Like the interest rate is high, but it's never going to stay at this level the entire duration of the time that you're investing. So you just have to realize you are going through cycles and seasons of periods, and you just have to wear this period and just get through it. And I think that comes with experience, because when I started investing, interest rates were around 5%. Then obviously the last couple of years it dropped really low to 2-3%. And it was really cheap to get money. Lending climates change. And then, went from really easy to getting money to now quite hard to getting money. But there's always going to be ways to get things done, right? You just got to be thinking out of the box, being creative and having that approach. Because if you have that approach, you'll always find a solution.
Mm.
And getting the numbers right, I think, is super important. That actually alleviate, for me anyway, when I was building this portfolio, the initial portfolio, like what alleviated a lot of the concerns was the fact that, I knew I was buying a good deal, number one. So I wasn't just like paying quote unquote retail or even above retail for these properties and just, sitting there hoping and praying. And cash flow, cash flow is very important. A lot of people look at a deal today, especially with current interest rates, and go, oh, it's negative cash flow by 20 or 30, $50 a week. And they go, I don't want it. But what they don't realize is, like, if they look at the fundamentals of the area they're buying in, potentially there could be rent rises over the course of 12 months and also interest rate decreases. I mean, the rents that I have on some of the earlier properties I bought is almost double now, I mean, that's just the way of the market. So, what was originally, yielding 6% is now yielding above 10%, in some cases. So I think time is a good healer in the property world, especially if you're, not silly and, buying at the top of the market or in silly areas or anything like that. So, as long as you take the right steps and stay unemotional, I think that helps. That helps a lot.
Yeah.
I can see some huge synergies between what you two are doing. And so there's no wonder that you guys have mutual clients.
Yeah.
How's the referral process? Like, how do you actually work together when you're working with these people and going, I know the perfect person? What's it actually like?
Look, well, for me, I mean, I get clients all the time asking for a good broker. So Jyh is someone that I refer quite a lot of clients to. And I refer clients to him because not only does he understand that process of building a portfolio of large properties and financing it properly, but as you know, a lot of the deals that we buy are conducive to getting equity really quickly. So I'm always on the lookout for people who are, more or less on top of that process of, we buy a house and then in literally a few months' time, we pull out the equity. And if the client wants to, he can literally go again and buy another property and like build that portfolio very, very quickly. So, we've got many mutual clients. In fact, I wanted to talk about one client in particular who actually secured his, we were just talking about this before the show, he secured his fourth property today.
Wow.
So congratulations.
So fresh, hot off the press.
Hot off the press. He's got a generic name, so I can say his name. His name's Matt.
Well done, Matt. We're cheering for you.
Congrats. But yeah, no, Matt, bought his first property in Crestmead in Logan in September 2021, $410K purchase price, and in November 2022. So about a year later, the valuation was $550.
Mm-hmm.
So there was $140K equity there to pull out. So that was kind of like the
penny dropping.
The penny dropping, yeah. He was super excited. I remember, Matt's a, happy-go-lucky kind of guy. You talk to him, he's always positive and happy and everything. So immediately we got the equity out and bought the second one, which was in Leichhardt in Queensland, which is in the Ipswich area. That was in June 2022. 430K purchase, and Val today's at 580, so there's 150K there. And then we transitioned from there because at that point, Ipswich and Logan was really starting to grow rapidly. And it became a point, it got to a point where he needed properties with more cash flow because the rents weren't catching up as much as we'd like. So we ended up buying out in WA in June 2023, suburb called Koodanup for 355K, and just the valuation today is at 420. So about more or less about 6 months, about 65K of equity there, which is about 20% from the purchase price. So I think that's kind of testament that, actually, sorry, my mistake. He's actually on his fifth house. Fifth property. Wow. Sorry. There we go.
Awesome.
So today was his fifth property. This one is again in WA. I'm not going to say where because obviously
it's fresh.
Yeah, it's fresh, too fresh. But I think it's testament to the fact that not only can it still be done today, because a lot of people that I speak to as well, they always say, oh, it was much easier back in the day with lending. Missed the boat, and lending was very easy and this and that. And, there's like real life examples of people that are doing it, including Jyh himself. I mean, he's bought the lion's share of his properties in the past few years when lending was extremely difficult.
Yeah.
So yeah, I mean, and just a little bit about Matt. He's a tradie, he's a sparky. Income's around about 170K. So not like a super wealthy or super high income earner. But he's a little bit smart about his lifestyle choices. He's not out there, living a fancy, beachfront apartment or anything. He's still, as far as I'm aware, still room shares with a couple of mates and lives a pretty simple life and, saves what he can and puts his money to work. So I think that's also important, those sacrifices.
That's got to be music to the ears of a mortgage broker.
Yeah, I might just add as well, when Matt came to speak to me, he had zero clue about what he was, what it was even possible. These were his words. He even said, he's like, I can't believe I have 4 properties.
Yeah.
And this is in the space of 3 years.
Yeah.
And so just seeing those light bulbs come up, it's just transformed his life, because he's now got around a $2 million asset portfolio across all these properties in just 3 years' time. But he's a hard worker. I know Matt. He's his income's about 170K, but he does a lot of overtime. So he works a lot. He's working hard. He's not just out there just having fun. Working a lot of long hours, and he also chooses to room share, like Simon said. So that way he's actually keeping his expenses down, keeping his rental expense down. So everyone has these opportunities, right? Like, it's just how hard do you want to work, and also how hard do you actually want to chase that goal.
Some good insight there.
I think as well, like, in my experience, and this is championing, what Jyh does day to day, like, the broker is the most important person as part of your team. More important than me, dare I say it, because if you can't borrow, if you can't pull out equity, you can't buy. And it's not about getting the lowest interest rates. It's not about getting the best cashback deals and all this kind of stuff that's out there at the moment. It's really about maximizing how much you can borrow, because for someone like Matt, to build this portfolio and ongoing as well, hopefully more to come, you really need to use the right banks at the right time. You need to be able to move around. You need to be flexible. I mean, for me, I'm constantly giving my broker credit card statements and income statements and all that kind of stuff to refinance and, try and move forward as much as possible. So yeah, having a good broker is super, super important.
Speaking of transforming your life, Jyh, where are you at when it comes to your own property portfolio and how you're sitting with it at the moment? Like, what's next? Is it more properties? Is it sitting pretty for a bit? Is it working on the business?
Yeah.
I feel like you've got options.
Yes. So for us, our goal was always to build the investment portfolio, which we've done. And recently we purchased our PPR. So that's a
Congratulations.
really nice
That's
goal
a big deal. That is a big deal.
It's a nice goal that we've been working for quite hard. So we just settled on that recently. So that's going to put a little bit of a pause on the property buying for a little while, because we're kind of maxed out with borrowing capacity. So my big focus for this year is to really work on the business and focus on growing and building like partners like Simon and being able to help more clients.
What a cool story.
Yeah. Home to live in now. Yeah. You know what comes next, right? You'll be taking holidays to Singapore soon.
This is a property investing podcast, so we'll stick to that. But I mean, good luck with whatever life throws at you next. Super, super cool to hear your story, Jyh, thank you so much for taking the time. Simon, thanks for, again, bringing on an excellent guest.
No, absolutely. Property Unfiltered, that's what we try to do and talk about real life stories and good and bad as well. So hopefully it's been super helpful and motivational for the listeners.
And I mean, the feedback's been phenomenal, hasn't it, so far? People are really resonating with the stories.
I mean, the feedback I'm getting is that it's a little bit different, to a lot of podcasts. It's more just not just about raw data and what's happening at any particular point in time. I think it's more kind of story based. So hopefully that resonates with a lot of people and helps people move forward as well.
I'm sure people will resonate with your story as well, Jyh. So thank you both again for a great episode. It's been wonderful to chat. And any questions, editor@smartpropertyinvestment.com.au. And Simon, they can obviously reach out to you as well if they have any questions.
Simon@housefinder.com.au.
Easy.
Email me anytime.
Awesome. Well, I think that's it for today.
Perfect. Thank you for having us.
Thank you.
Thank you for having me. Great to chat again. Looking forward to the next episode already. See you then.
Thank you.